Hello everyone, my name is Ljubica Radunović and I'm a student enrolled at course International Banking and Financial Regulation, which is taught by Professors Maria Elena Salerno and Gabriela Gimignano. I attended the webinar that was held at 2020 Eumol Winter School and organized by Eumol Jean Monnet Chair in EU Money Law and the University of Siena. Webinar was held at the 20th of November of 2020 and the theme was European Central Bank and Central Bank Digital Currencies, a Change of Heart. The speaker was Marta Božina Beroš. She's PhD and she's associate professor of European Financial Regulation and European Monetary Union Governance at the Faculty of Economics, Juraj Dobrila at the University of Pula. So in short, I'm gonna summarize what I found the main aspects of her presentation. So she focuses on digital currencies and the change of mind that European Central Bank displayed over the last 2 years from the perspective of European Central Bank. Central bank digital currencies, or in short CBDCs, are a very important global issue because we are witnessing an increased digitization of payments and also development of privately issued digital currencies, PDICs. EU has developed a two-pronged approach to privately issued monies, tackling their monetary and regulatory concerns. Firstly, by adopting the fifth anti-money laundering directive, and secondly, by exploring possibility of issuing central bank digital currency for euro area, so it means digitizing euro. And in her presentation, she focused on the second policy initiative. Like she said, development of PDICs was one of the main reasons for this initiative. So firstly, she talked about weaknesses of PDICs. So virtual currencies and PDICs are generally like legal foundation. They lack the backing of sovereign established authority, and they lack legislative foundation needed for their mandatory acceptance. In economic sense of term, virtual in the economic sense term, virtual currencies and PDICs cannot be considered money because from economic standpoint, money has to have those three characteristics to be treated as a mean of exchange, share of value, and unit of account. Also, central banks are working on central bank digital currencies because they see that privately issued digital currencies are actually deconstructing the traditional state money nexus, and they hinder the contact of central bank key policies, mainly supervisory and monetary policy. PDICs and virtual currencies raise concerns to those associated with money laundering. So then she explained what CBDCs actually are. So CBDC is an electronic fiat liability of central bank that can be used to sell payment or as a share of value. So majority of money circulation today is already private in the sense that is created by private entities, commercial banks, in the well-established process of deposit taking and credit multiplication. So money today is already digital in the sense that it's held on central bank accounts. But this type wholesale central bank digital money is not the kind of the central bank digital currency that European Central Bank is now considering. So, European Central Bank has the tasks to establish central bank digital currency legal status. Also has to think how to mitigate financial safety concerns and problems of anonymity. So, Professor highlighted some phases. European Central Bank was the first new institution that tackled the issue of virtual currencies and PDX with a policy study. That was in 2012, and the policy study was revised in 2015. Secondly, in 2019, European Central Bank published the proof of concept that was for theoretical purposes, but it did deliver a contribution to a more common understanding how actually distributive ledger technology works. And the European Central Bank and the Euro Chain Group explored anonymity and made a contribution to this issue. For higher level transactions, the European Central Bank has said that they would trigger immediately the inspection of anti-money laundering authorities. So that was, as the ECB calls it, controllable. That is a controllable anonymity. And in May 2020, European Central Banking Supervision stated that European Central Bank would remain technologically neutral because European Central Bank doesn't serve technology. It is a technology who serves European Central Bank. And European Central Bank then didn't see a case for issuance of central bank digital currency because there was an exponential surge in the need for cash during the March of 2020. But regardless of technological neutrality, uh, European Central Bank will continue its work on central bank digital currencies for analytical purposes. And lastly, in October 2020, European Central Bank delivered its report on digital euro, which is operational and legislative framework for introduction of digital euro. And European Central Bank said that EU has to offer a safer alternative to private digitized solutions that are currently available. Also, it's stated by European Central Bank that digital euro would be also a step forward in greening our economy, which is important point. And European Central Bank has not decided on the specific design of the digital euro, but now it is actually exploring different design options. And central bank digital currencies could be at the end of traditional reserve banking as we know it today. And by mid 2021, European Central Bank will decide whether to launch a project on digital euro, and by that time, European Central Bank has to do a lot of work. She said that it has launched a public consultation, and European Central Bank has to define legal basis for issuance of the central bank digital currency. So, so the question I posed was the question I posed to Professor Berosh was having in mind in China, they have already developed digital yuan and plan to expand its use in a whole country. And in United States, they have Libra, which is supposed to become their digital currency. So what does she think is Europe and digital euro lagging behind other currencies is a potential danger for Europe, or it can be like an example for its system, having in mind that developing digital currency is not just a a technical issue, but also it has economic and financial effects. And what Professor Berosh said is even though it seems that they are lagging behind some other countries that are pushing the digitization for their currency or trying to find privately made solutions within their own digital currency system. She said that she doesn't think that European Central Bank is lagging behind, and she thinks it's going apart the solutions that are being advised by China or United States. And her opinion is that Europe is being more diplomatic in that area, and it's keeping its cards, and it's working on that issue in and that transformation in a very cautious way, being aware of a reputational risk that was also raised as important in terms of central bank digital currencies, and also learning probably by observing others. So because others have done it more publicly. So even though Europe is not probably the strongest, the biggest technological industry, if you compare it with Silicon Valley or somewhere else, but she thinks that Europe and the European Central Bank still has a lot to offer. And so to conclude, she was being optimistic, and she said that European Central Bank is definitely being more diplomatic and is learning by observing others, and it still has some time to do.